Good morning, trading family. Welcome back to the trading floor. Yo, trading pack. This is the wildcard locking in from the mothership with TB on the 1 and 2s. Today we're reading the tape straight from the boards. No chaser, no filler. The market just printed a record close. But beneath the hood, it's a full costume party. TB, you got the lay of the land?
We do. Quick reminder first, nothing we say here is financial advice. Do your own research, trade your own plan. We're just two people talking markets. Now the tape. SPY closed at 773.16, up over 3% on the week. The Qs ramped 5.05%. VIX settled at 15.43, which is Monday insurance, not fear. Over the weekend, Berkshire Hathaway dropped its print. $4.5 billion in buybacks, $20 billion in equities, operating earnings up 16%. The grown-ups confirmed the tape with real money.
And that's where the Mirage starts, bro. Because the number they confirmed is built on a jobs report that, let's be honest, was softer than a wet noodle. You had minus 23,000 jobs against a plus 85,000 consensus. And yet, unemployment went down. That's the part that got everyone excited. Walk me through it.
Unemployment fell to 4.1%, but it fell for the wrong reason. 265,000 people dropped out of the labor force. The participation rate dropped to 61.4, the lowest since February 21. The headline unemployment rate improved not because jobs were added, but because the denominator shrank. The market read no rate hike and stopped reading the internals. That record close was built on a misread, not on strength.
So the tape's sitting here wearing a record high costume, while tech runs plus 7.2% on the week, and energy, my energy, the whole sector, gets smoked for minus 3.44. That's not a broad rally, TV. That's a K-shaped tape with fancy shoes. And the energy move is the part that's got my full attention.
It's a costume, exactly. And the K-shape is glaring. The tech sector tech plus 7.2. XLB materials up 4.8. XLY consumer discretionary plus 3.25. On the other side, XLRE real estate down 0.2. Utilities down 1.67. And energy down 3.4. The worst of the bunch. Money rotated hard into growth and out of anything that smells of inflation protection.
Right there. So while all that was happening, I'm watching crude hold the line. West Texas Intermediate crude around $79, Brent above 84, and the energy sector ETF gets sold like we're going into a recession. That's the disconnect. I went long, the energy sector ETF, in my paper account on Friday at $57.53, stop at $55.50. If Thursday prints hot, the stop is law. But if the geopolitical premium sticks, that gap closes.
And that's the second story today, the fork. Thursday's CPI is the real binary event sitting right on top of this tape. Last month's headline, month over month, was negative 0.4%. Consensus now is plus 0.1. Even an inline print looks like acceleration, and that base effect is a trap. Core month over month at 0.2 after last month's flat 0. That's the tell. Year-over-year headline at 3.4, core at 2.5. And behind the data, we've got Fed politics. Trump trying to push Cook out, Barkin aligning with Warsh, Bloomberg still floating the possibility of a hike. Warsh has his first big live test Thursday morning.
Bro, the political drama alone is worth 50 basis points of volume. But here's what makes the fork sharper. Gold hit $4,402, an all-time high, right next to SPY's record close. And the 10-year, after fading on that dovish jobs headline Friday, crawled right back to 4.65%. Both the hard asset warning system and the bond market are flashing. Inflation isn't dead. The tape says soft landing. Gold and yields together say the no-hike trade is fragile. Thursday picks the liar.
That's the spine. When gold is at all-time highs and yields are creeping back in the same week, the market printed a record on a weak jobs misread. Someone is wrong. We've been down the oil geopolitics road before, though, WC. A third of our long oil risk calls have missed. Track record is clear. So I have to ask, what's the de-escalation countercase for the energy sector ETF play? Because we cannot declare a floor here.
Fair, and I'm not calling a floor. The de-escalation case is that Trump walks his semi-negotiating back to something real. Bessent's imminent deal actually materializes, and the geopolitical premium evaporates like it did in April. If that happens, crude drops $5. The energy sector ETF sells further, and my stop at $55.50 triggers mechanically. Also, if Thursday CPI prints hot, energy gets sold with everything else regardless of geopolitics. I'm not married to the thesis, I'm married to the stop. The setup is the disconnect, not a promise that oil stays elevated. If the live tape fights it, I'm out.
That's a clean framework. The K-shaped Mirage and the CPI fork set up the whole week. Now let's move to the earnings gauntlet. You're up.
The gauntlet starts tonight after the close. Rocket Lab, ticker RKLB, and ASTS, the whole space complex running on heavy short interest, and that SpaceX YPO chatter floating in the background. RKLB closed above its 200-day moving average, but those support, IPO, and offering levels 126 to 128, 135, and 145 to 150 are SpaceX's, not Rocket Lab's. If we see a pop, those are the levels to measure. Tomorrow night is the main event though. CoreWeave, estimated at negative 167. That's the purest test of the artificial intelligence line on the tape. Monetizers get bought, spenders get sold. Supermicro, Lumentum, CAVA round out the supporting cast. Tomorrow night's print decides which artificial intelligence names get capital and which get cut.
And the economic calendar next. Keep it tight. Wednesday, we get NFIB Small Business Optimism, consensus 97.8, prior 97.4. Also, Japan's Reuters Tankan, prior 13. Thursday's main event, all the CPI numbers we just walked through, plus German CPI and Japan PPI. Friday, core PPI month over month at 0.3, prior 0.2, year over year core PPI, prior 4.7%, and UK GDP. The whole week builds to Thursday's release. A beat snaps the no-hike narrative, a miss fuels the record chase. The fork.
And the sector color we already laid out, tech +7, energy -3, confirms that aggressive risk, on into growth. But the energy sell-off while crude held is the weird spot. I'm playing it, but I see the K-shape fighting me. International flows, Asia ripped overnight, Nikkei +2.08, Hang Seng +1.05, Shanghai up 0.67, KOSPI up 0.65 with small caps up 6%. That bid feeds US futures gently. Europe is muted, DAX +0.2, FTSE down 0.23. FX, dollar yen at 158. Carry trade alive and well, dollar index up just 0.1. No unwind signal, no yen panic.
That yen stability keeps the carry trade engine running and doesn't add pressure to US equities. Now let's get into the portfolio hot news. The theme touching the book directly, the Hormuz semi and the energy sector ETF disconnect.
This is my wheelhouse. Over the weekend, Trump walked back Bessent's imminent Iranian deal language to semi-negotiating. Tehran formally set demands. The deal is not done. Crude responded. West Texas Intermediate. Crude at $79.02. Brent above 84. Oil up over 1% pre-market. The live gauge says the geopolitical premium is sticking. But all last week, the energy sector ETF got sold even as crude held. That gap is what I'm trading. I took the energy sector ETF in my paper account Friday at 57.53. Stop at 55.50. Mechanically hard. Bull case. If the Hormuz tension doesn't evaporate, refining margins stay supportive, and energy is under-owned after that sell-off, there's catch-up. Bear case. Thursday. CPI prints hot and kills everything, including energy. The K-shape throws it out with the bathwater, and I get stopped out. Second-order effects. Higher oil feeds inflation expectations. Transport costs. Bite. And the Fed's political calculus gets nastier. It's a tight string.
And we've seen this movie before. Our measured blind spot on oil geopolitics means I have to voice the de-escalation counter case loudly here. If Iran suddenly plays ball and a deal gets announced, or if Trump's saber-rattling calms as fast as it escalated last spring, crude could drop sharply and the energy sector ETF gap below your stop. I'm not betting against you, but the invalidation level is 55.50. You have to respect it if the tape turns. No emotional attachment. And if Thursday's CPI comes in hot, the stop might trigger intraday before you can rationalize.
100%. The stop is the position. I'm not adding into a flat board or a binary event. Cash stays dry on both books. My TFT algo and my gut account are in wait mode. The energy sector ETF play is on, but it's my only active bet. The rest is patience.
There's also a strategic minerals thread that fits the same supply chain rebuild story we track with space. The Department of War dropped a $400 million conditional loan to an Australian miner for the world's first primary scandium mine. The stock spiked 29% and faded to plus 16. Don't chase that. Pentagon asking defense firms to boost production. China controls 90% of processing. USA rare earth reports today. The theme is the same. Washington is rebuilding the strategic supply chain. Buy liquid names on dips, not the spike chaser that faded 13 points off its high.
It's the same playbook as the space recap we measured. Levels, not hype. And that ties back to tonight's RKL, B, and ASTS prints. The whole complex is funded by this national security rebuild. The chatter around SpaceX 1PO just adds fuel, but the infrastructure story is real.
All right, here's what we're watching tomorrow. Thursday's CPI, headline month over month plus 0.1, core 0.2. Any upside breaks the tape. And CoreWeave after the close. The artificial intelligence line in the sand. My wave trader algo is in 5 positions. URA, the big winner at plus 16.7% on the cycle. No new entries in 2 sessions. The gates are filtering, not broken.
And I'm watching those same levels. CP, I decides the fork, and the stop decides my energy risk. No hero trades, just discipline. Until the tape talks, stay savage. I'm Wildcard, he's TV. See you on the other side of the print.